Good afternoon. This is Mark Espy with MarketTamer.com. I'm also known as a Robinhood trader. We find ourselves on the 16th of July, and it's Friday afternoon, and we're looking at the Dow Jones Industrial Average. I must remind everybody before we begin here that everything we speak about today is for educational purposes only and never to be construed as a recommendation to buy or sell anything. So please do your own due diligence. Well, a big down day today, 261 points down in the Dow Jones. And I think it's going to continue. We're going to get follow through on this. It's a credible down move because it was supported by fairly high volume. So where are we going to stop? I think the first place to look is probably the double bottom that was put in May and June, and that's at about 9,800. It also coincides with a swing low that was put in February, early February of this year, and that was at 9,835. If it breaks those levels, we're going to come down to about 96.14, which was the recent low that we just put in here. And there are other lows that I want to point out to you. There's a low also from late October of 2009 at 96.80. 9,500 appears to be very strong support from August 2009 and early October of 2009. 8,800 from June of 2009, and then 8,100, and there's some good market symmetry at that level as well. If we push to the upside, the recent high that was put in here, that was 10,408, I believe. We also have a swing high from early June, which is right here, and that was at 10,315. We have this swing high right here, which is about 10,600, a swing high here about 10,900, and the most recent high here at 11,200 and change. I think that there's pretty good resistance, 11,250 to about 11,500. We also have this shelf that was put in back here in late January of this year at about 10,750, and we need to recognize that. But I do feel it's going to come back down. To backtrack a bit, last week I felt that we were going to languish a bit, maybe stall a little sooner than we did, although I did feel that we could come up and test the bottom side of the 200 simple moving average, which is exactly what we did. So we came up strong for a day or two here, and then we put in a couple of dojis and some narrow range trading days, and that was the setup for the down move. And in my daily analysis with our students, I pointed that out, and I did feel that we were going to get this big down move. I didn't know it was going to be this big, but I did feel we were coming back down. It's hard to ignore the fact that the 50 simple moving average crossed below the 200, because that's a fairly significant occurrence. So I think that we are going to get follow through, and my best feel is we're going to come down here probably to the 96. We'll have a little bit of a stall, possibly around 9,800. Looks like the stochastics is turning over from the overbought area, and we're getting a crossover. And we're coming back down on the histogram toward the zero line, so that shows a loss of momentum to the upside, and it looks like the MACD line is turning over, and it might begin to go down and cross over the signal line. Okay, with that, we're going to move over and take a look at the SPX.